This video is not financial advice and is a commentary only for educational purposes. All right, let's dive right in. Today we are digging into a really important report that just dropped on April 10th, 2026. And what it's telling us is that the global economy, well, it's standing on much shakier ground than a lot of people realize.
And it all starts with this one number, 42.2%. I know, it might not look like a whole lot on its own, but in the world of economic stability, this is a massive flashing amber light on the dashboard. It's a clear signal that the entire system is under some very, very serious strain. So what is this number really? It's the Weighted Fragility Score, or WFS for short. Now, the easiest way to think about it is kind of like a fever reading for the economy. The higher the score, the more vulnerable things are. And 42.2%, that puts us squarely in amber alert territory. But here's the really crucial part. It's in an acceleration phase. That means the fever isn't just high, it's getting hotter, and it's getting hotter fast.
So why is the fever climbing so quickly? Well, the answer is packed into an unbelievably chaotic 48-hour window, where the global system got hammered by three distinct, really powerful shocks. And this, right here, is where the story gets wild.
Okay, the whiplash here is just intense. On the morning of April 8th, a U.S. strike hits Iran's main oil export hub. Boom! Crude oil soars to levels we haven't seen since 2008. The market is screaming escalation. Then, just a few hours later, a ceasefire is announced and oil prices completely crater, dropping over 15%. So, relief, right? Problem solved? Nope. The very next day, reality bites back. The Strait of Hormuz is still basically closed for business. And then, to top it all off, on April 10th, new data shows inflation is still running red hot. It was just a dizzying, confusing sequence of signals.
You know, while financial markets were celebrating that ceasefire news, the CEO of one of the world's biggest oil companies just cut right through all the noise with this one simple statement. The Strait of Hormuz is not open. With that one sentence, he confirmed what the markets were trying so hard to ignore. The physical supply chain was still broken.
And right here, you see that disconnect perfectly. The market heard the word ceasefire and thought, great, problem solved. But the reality on the ground, it was a totally different picture. Only 9 ships got through, compared to the usual 100+. You had hundreds of tankers just stuck. The physical world was telling a completely different story than the financial one.
And then came the third punch in this combination. Just as everyone was trying to figure out the Hormuz standstill, the latest inflation data dropped, and core inflation came in hot at 3.1%. This basically slammed the door shut on any hope that the Federal Reserve could ride to the rescue by cutting interest rates. It just confirmed that their problem was getting worse, not better, and it reinforced what this report calls the debt sustainability trap.
So, with these 3 shocks just reverberating through the entire system, the old outlook for the future? Yeah, that had to be thrown out the window. And as we're about to see, the probabilities of what's coming next have shifted, and they've shifted dramatically.
And here is that shift laid out in black and white. Before all this happened, the chance of a positive outcome, what they call a ceasefire dividend, where things kind of stabilize and get better, that was sitting at around 20 to 30%. Now, it's completely collapsed to just 5 to 15%. And at the same time, the probability of a stagflationary impasse has surged, making it the most likely scenario, now at 40 to 55%. I mean, just look at this shift. The probability of this really negative stagflationary impasse scenario has just shot through the roof. This isn't some minor tweak to the forecast, you guys. This is a fundamental reassessment of the biggest risk we're all facing. What was once just a possibility is now the leading contender.
So what is this stagflationary impasse that we're now much more likely to face? Well, it's pretty much the worst of both worlds. You've got that sticky, high inflation that just won't go away, that 3.1% number. And it's happening at the exact same time the economy is slowing to a crawl, with growth estimates down around 1.3%. It's a nasty trap because the normal tools you use to fix one problem, like cutting rates to boost growth, just make the other problem, inflation, even worse.
Okay, so now we get to the final and maybe the most fascinating part of this whole report. It goes beyond the raw numbers to look at the underlying stability of the system itself, and it uses this concept they call the avalanche index. The report uses this fantastic metaphor. Think of the entire economy as a big pile of sand. These recent shocks, they didn't remove any of the sand. They just shook the pile really hard, rearranging all the grains and making it way more unstable, way more likely to collapse. The fundamental risks haven't vanished at all. They've just been redistributed into potentially an even more fragile state. So the avalanche index looks at these wild swings not as a sign of a healthy market, but as a symptom of deep, deep instability. That rapid jump from fear to relief and back again, the report calls that a loading event. It's like it's just adding more stress and more energy to that sand pile, pushing it closer and closer to a breaking point.
So if you take just one thing away from this whole explainer, let it be this. This report reveals a fundamental and, frankly, dangerous disconnect. In the real world, the physical supply chain for one of the most critical commodities on the planet is broken. But in the financial world, markets are just bouncing back and forth, reacting to headlines, without fully pricing in that broken reality.
And all of this leaves us with one final critical question. We know the system is fragile. We know the supply chain is broken. We know the markets are just swinging on pure sentiment. So what happens when the next shock inevitably arrives to shake that sandpile all over again?